Hey guys, James here with Waterford Business Solutions. And a common thing that we see occur outside of taxes in Q1, Q2 a lot of years is going to be insurance companies, especially bond companies, requesting financials. And generally requesting not just financials, but requesting certified financials. So we wanted to talk a little bit about why you would end up working with a bond or an insurance company that would need to request financials, and then what are kind of the different levels of financials or certified financials that you could need to provide. So join us today as we kind of jump in and talk a little bit about that. Before we jump in, I just want to invite you to go ahead and like and subscribe to our channel here. We put out helpful information like this every single week to help you as a business owner, and more specifically contractors and tradesmen, to be able to understand the different facets and financial facets more than anything of their business, how to use their softwares, and what different functionalities and features they need to be looking out for, both in day-to-day operations, but also in more fringe cases, just like this, talking about insurance and bonding. Go ahead and hit that like button, hit that subscribe button, leave a comment, share this video or our channel with anyone that you think can benefit, and turn on notifications so that you get notified whenever this video comes up, and help our message get out so that anyone just like you can benefit from it. Now, as we jump into and we talk about certified financials and financials in general, generally it's going to be an insurance or a bonding company that are asking for them. And generally we're talking fairly large policies. Bonding is typically done by contractors that are doing large commercial jobs, and it's basically insurance for getting the job complete / getting the work done properly, and them not messing up anything else in that project. And generally this bonding is going to happen on projects that are going north of like $100,000. A lot of companies will have like $250,000 bonds, $500,000 bonds, million, 2 million, 5 million, kind of going up in that direction. And bonds are typically the most common that we see when it comes to certified financials and everything there. When we're looking at that bonding, the reason that they want certified financials is the bond company wants to make sure that they are insured themselves. So they're going to want to know what the profitability of your company is, what the balance sheet is, how many jobs you're doing, what the profitability of those jobs are, how quickly they're getting done, how much you're making off of on the billing schedule, everything like that, because ultimately cash is king. Because if a job was to go belly up and the bond company had to pay out, they're going to need some way to recoup that cost. And a part of that is going to come from you. So they've got to have their insurance on the insurance that they are issuing you, to make sure that if something goes wrong, that they can get back at least a minimum amount of everything going on. So super, super, super important that they understand your financials. And while we're generally talking here and while we're generally taking a look at everything, it's going to be a lot of cash is king situation when it comes to bonding. Money in the bank account is basically a one-for-one guarantee to the bond company. However, anytime you go outside of money in the bank account, we can look at fixed assets, vehicles, everything like that, or just future profitability in general. So whenever you're going for a bond, they're going to request some type of financial. When we're taking a look at insurance, general liability will sometimes request certified or reviewed financials from you so that they know that these are legit numbers for sales, for labor, for subcontractors, everything like that, and not just you throwing numbers onto paper. And ultimately, that's going to be anything that is asking for certified or reviewed financials. They are looking to confirm that this isn't just you're throwing random numbers on paper, that there is some type of expertise standing behind this. And so we really go into kind of a plethora of ways, but kind of a scale of the different financials requested. The first is going to be the simplest. They're just going to request financials, a P&L, AR report, balance sheet, maybe a statement of cash flows, AP report. They're just going to request that. It doesn't have to be from your accountant, doesn't have to be from an EA, a CPA. No one has to back it up. It could be that you are doing the books yourself and you go ahead and you send those financials and they're perfectly happy with that. Generally, this is going to be for fairly low-level situations. Might be your general liability insurance, especially if you're not carrying like huge limits or anything like that, or you're a huge company. Might be for smaller bond levels. But once you start getting into the north of $500,000 bond level, or once you start looking at a company in the $5 to $10 million a year income range, they're going to start asking for more than just the financials. So then we move into reviewed financials. Reviewed financials can be done by pretty much anyone as long as they are a third party to your business. So that's going to be a situation where if you've got a third party bookkeeper or an accountant, but even generally bookkeepers are allowed to do reviewed financials, they can do the financials and then write a cover letter basically stating, hey, this is not done by the client. I'm the one doing the work. I support the work, and everything is good to go. All it is a quick little cover letter that goes on top and basically stating that, hey, they're not hiding anything. They're not doing this themselves. This is backed up by an independent third party. And basically they're putting their name on it. Now, depending on the level, the amount, anything like that, they may request above reviewed financials an actual certificate behind that review. So an enrolled agent or a certified bookkeeper or potentially even a certified public accountant or CPA to do it. Generally, the top line there is going to be a CPA because they carry, in theory and historically, the highest level of professionalism and the highest level of ethics needed in that kind of metric between certified bookkeepers, enrolled agents, and CPAs. So that'll be kind of the highest level. And they'll generally say that they have to be reviewed, CPA reviewed, EA reviewed. And a lot of times I found that if they say CPA reviewed and you call up the company and you say, hey, I work with an accountant, they're third party, but they're an EA, or I work with a bookkeeper, but they're a certified bookkeeper, here's their certification. Generally, they'll waiver on that a little bit depending on the level of bond or quote that you are asking for here. So that's going to be kind of one area that we look at there. Moving beyond reviewed financials, we're going to kind of step up a little bit further where it's still reviewed financials, but reviewed with notation. Now, typically at this point, your bookkeeper, your certified bookkeeper is going to be knocked out. They're no longer going to be able to really work on this or provide this to you because the companies aren't going to accept it. Some might, but very, very, very few will. Generally, we have to go ahead and get to the point of being an enrolled agent or a CPA and having some type of pretty hefty exam and certification standing behind you to work in those reviewed and noted. Now, what we're adding on to a noted financial over just a reviewed financial is we're no longer just saying, hey, here's the financial statements. They've been reviewed, confirmed for accuracy, and prepared by a third party. Now we're going to add in some notations. We're going to say, hey, the AR is at this, their aging looks like this, they get paid like this, they anticipate to write off this much money, this, that, and everything. You'll notice a high liability, or this is the payment schedule on these liabilities, so that the company knows kind of what the cash flow within the company looks like specifically. So we'll start writing up specifically kind of for each and every liability out there. We'll write up for different assets out there. And depending on the company, they may also ask for a WIPS report, a works in progress report, basically saying, hey, this is the work that we have bidded out, this is the percentage of completion, this is how much we built out, this is how much we still have to bill out, this is how much we have incurred expense-wise, this is how much we still anticipate to incur expense-wise, kind of moving into an AIA standard of billing for a lot of these, especially bigger bonds and everything. Once we start getting up into the north of $3 to $5 million range, we're going to start needing those more detailed, noted, even reviewed financials there with everything. So definitely a big thing to kind of consider there when we take a look across the board at everything. From kind of that reviewed and noted financials, we move into kind of full-blown certified financials. And all a certified is basically just a really detailed, reviewed and noted. When we go through and we prepare a certified financials, it's one step below doing an audit. Those reports generally are going to come out to be 30 to 50 pages long. They're pretty detailed. Anything that we could find that might be a weird anomaly is going to be noted in that certified financial. A certified financial will have to be done by a designation, either an EA or a CPA, and a lot of bonding companies do go all the way to the level of just requiring a CPA to do it. These are pretty time consuming. They're not the cheapest to get done. We used to be able, because there was a good bit of CPAs out there, get them done in the $1,000 to $2,500 range. Now we're seeing that be substantially higher in the $5,000 to $10,000 range. It's definitely a lot, and it's a fact that you've got to take into account because it is a very time-consuming task. Even us, we've got a kind of portfolio, a template that we use here that we will try to copy and paste as much as possible, but it's still, depending on the size of the client, a multiple hour, if not a multiple day event to properly review, notate, and certify these financials. And at the end of the day, you're signing off, agreeing to everything in those financials. So it's, if you're going to a CPA or someone that's not doing the books for you, they're going to be asking a lot of questions because they're putting their name on this. And like I said, this is basically one step below being a audit, being a financial full-blown audit. So generally companies aren't going to go above that certified financial mark, but it is going to be something that generally every year, if not every other year, you're going to need to provide. And generally we start, like I said, finding the need for the full-blown certification once we start getting above kind of a $3 to $5 million mark in bonding. And when we get into GL, when we're talking about companies that are 10 to 15 million a year in income, that's when we start getting more into the certified financials, or at least the reviewed and noted. Really depends on your company, also depends on your history. If you've got a great history with that company, they're going to be a little bit more lax with you. But if you're a newer company or they haven't dealt with you before, they're going to be pretty strict on what it is that they're wanting, what it is that they're requesting, and what it is that they need. Now, going above certified financials, and this is very, very rare, is going to be a full-blown audit. And once we hit a full-blown audit, only a CPA is going to be authorized to do it. So at this point, you've got to be using an independent third-party CPA. Not a friend, not anything like that, and it's going to be pretty pricey because it is very, very detailed. A full-blown audit generally is going to be a minimum, even for smaller companies, generally a minimum of a 50-page write-up. if not like 100 to 200 page write-up. We don't do a ton of those audits in-house ourselves just because they are so time consuming, but it will get very pricey if you have to get there. So all of this is stuff that you have to consider in running your business. If you are needing to pull bonds for $10 million plus coverage, you're going to not just have the cost of that bond, but you're also going to have the cost of the financial preparation and the documentation to be able to actually pull that bond. So you've got to make sure that you're taking all of that into consideration when you're pricing these jobs and choosing to do these jobs. Ultimately, pretty much any time you get out of doing just regular residential work or even doing minor or small residential installs or commercial service or small commercial installs, you're going to start needing these. Doing big custom home installs, generally they're going to request bonding because of the potential for destruction that you have there. So they're going to want that guarantee that you're not just licensed, you're not just insured, but you've got a guarantee that this is going to be covered up to this amount. Same thing when we get into big commercial jobs. If you're doing huge jobs for building out plants, for building out warehouses, things like that, they're going to want to guarantee that you've got this much money behind you to be able to pay for any damages that you make happen. Again, hopefully that never happens. That's ultimately the goal of a bond, is to prove that you could pay for it if it occurs, but hopefully you never have to pay for it. But that's going to be when this stuff starts coming into effect. So when you get into looking at those bigger areas, while they can be very profitable and you can make a ton of money doing them, there's a lot of other back-end paperwork and headache that you've got to worry about there. As always, guys, thanks for joining us. This is definitely kind of a timely video. We see a lot of this going on kind of March, April, May, even a little bit into June, because that's when these companies are requesting everything. So that's why I wanted to go ahead and put this video out. If you need help, or if you don't understand that what's going on, or if you need to worry about this, don't hesitate to reach out to us here at Waterford Business Solutions. We're very familiar in what is required in these situations, how these financials have to work. We work with multiple different bonding agents and bonding companies out there, along with have that personal knowledge of filing those and working in those on a yearly basis for a lot of clients. So you can give us a call at 864-351-0852 or email us at info@waterfordbusiness.com, and we'd be happy to help you out there with anything that you have. Join us next week as we continue giving you great information just like this so that you can go ahead and better yourself, better your business, and ultimately master your finances.